Hello everyone, welcome back to RR Legal Tips. Now we are discussing compliance calendar for entire year 2025 for companies. This is complete guide for ROC filings, SEBI, GST and more. So are we a business owner or a director or a compliance officer struggling to keep up with all legal filings and obligations? So in this video, we'll give you a complete breakdown of compliance for all companies, whether you are running a private company, public company, or a registered entity. From ROC filing to labor laws, SEBI rules, GST, TDS. So this video has everything you need to stay legally compliant in 2025. So compliance for private companies. First we discuss on private companies. So let's start with the basic ROC compliance requirements for private limited companies under Companies Act 2013. So annual director disclosures MBP1 and DIR8. MBP1 is directors must disclose their interest in other entities. And DIR8 is the declaration of non-disqualification as a director. And DIR3 KYC is a mandatory KYC by 30th September every year. If it is a late, then late fee is 5,000 rupees. And coming to annual compliance, DPT3 yearly once. This is a return of deposits every year on or before 30th June. And MGT 14 filing of board resolutions 30 days from the resolution. AOC 4 is a financial statements 30 days from the AGM. MGT 7 is an annual return. Due date is 60 days from the AGM. And there are half-yearly compliances, half-yearly filings, MSME 1, outstanding due to MSMEs. So due date 30th April and 31st October, because once in 6 months this form needs to be filed. Then we have MR1, appointment of KMPs, MDs and old-time director. So penalties ranging from 10,000 to 10 lakh based on the default type and rule. And additional compliance for public companies. So with all the above compliance, as well as in addition, they must follow other half-yearly filings like PA6, reconciliation of share capital, due date 30th May and 30th November. MR3 is the secretarial audit report for companies meeting capital turnover, no criteria. Penalty for MR3, non-filing 1 to 5 lakh for companies and up to 2 lakh for officers. Then we come to listed company compliances. The more stringent norms under SEBI and LODR regulations. MGT 15 AGM report within 30 days of AGM. LODR applicability for companies listing equity, debenture, preference shares, mutual fund units and more. So market cap based obligations remain even if the company falls below threshold limits. Depends on the market cap based obligations. And there are event based compliances which trigger like capital increase, auditor appointments, and charge creation. Charge creation CHG1. Even for modification of charge within 30 days. And DR2 for appointment, director, KMP, or resignations within 30 days. 81 is for auditor appointment within 15 days from post AGM. SH7 is for change in share capital within 30 days. And Form PAS3 is for share allotment within 30 days. INC 22, change in the registered office of the company. CSR2, this is corporate social responsibility reporting. And late filings would attract penalty. Apart from these, labor law compliances are there. Let's not forget labor law obligations under ESI and EPF. ESI Act 1948. So applicable to 10 plus employees earning less than or equal to 21,000. Contribution, yes, employer 3.25%. employee 0.75%. Due date 15th of every month. And Employee Provident Fund Act. There are mandatory compliance for companies 20 plus employees. EPF. Contribution 12% by both employer and employee. DA will attract interest from 5% to 25% per annum. And apart from this, we have GST compliance. So mandatory for every GST registered business. There is a GSTR1 sales report by 11th of next month. And GSTR3B summary return by 20th. And GSTR9 9C annual return reconciliation by 31st December. So penalties include 18 to 24% interest per annum, plus late fees 50 rupees per day or 20 rupees per day for nil returns. And there are TDS compliance and Income Tax Act. So deduct TDS as per the applicable threshold limits and deposit by 7th of every month. So example 30th April for March TDS. And file TDS returns quarterly, July, October, Jan, May. So these are TDS return quarterly basis. Then penalties includes 200 rupees per day late fee plus interest, fines up to 1 lakh under section 271H. So now the conclusion is compliance is not just about avoiding penalties. It is a good governance and for stakeholder trust. So better follow with the checklist, use compliance calendar, automate reminders for ROC and tax filings, appoint a qualified company secretary or compliance officer, review your statutory audit and internal audit systems. If you found this video helpful, don't forget like, subscribe and share with your entrepreneur friends. We have 2 channels, RR Corporates and RR Legal Talks. Please do subscribe RR Legal Talks. And we have other channel, RR Corporates. Thank you.